Howdy, Casey. How you doing? Hope you're doing well. To all of us who are members in the community, don't forget this Friday we have a super important meeting with one of our members that will be telling us all about his own personal experience of previous cycles and just general, kind of a learn from others and do your own mistakes kind of thing. And that's just a quick reminder. For the rest of you, don't forget to subscribe to the Patreon thing right there. Don't forget to sign up. That way you can join in the community and be in the know before the market goes insane and you caught off guard by surprise. Although none of this is surprising to us members of my community, right, Casey? And what I want to say, I hope you're doing well. Yes, I am doing rather well. Thank you very much. For those who don't know, there is a current discount that will be active, will expire on the 1st of September. And you can get up to 70% discount to join the community. Academy members, graduates, don't forget, everyone needs to sign up to the newly made tier. It's now only $6. I know some people have issues with signing up. Let me know and I will help you out. Unfortunately, I know there's not a lot of ways to go around it. It's kind of annoying, but needs to be done. Basic access, $4 instead of 10. For the first year, all of this is, of course, for the first year. And, of course, one-on-one Academy instead of $5,000. Right now is only $4,000. Significantly discounted. So yeah, all of that expires on the 1st of September. And no, this is not a monthly payment. This is a one-time payment, just to be clear. Just there is no other way to set it up. You basically sign up to this tier and then switch to another one. All right, so with that in mind and out of the way, let's get into analyzing the stock market. You know what time it is. It is the time to go over the chart and see what the technical stuff is saying to us right now instead of trying to guess. So the 1 minute is really not all that interesting. We kind of see that we've been moving in that wedge-like structure. We basically opened up with a tiny little gap right there. You can see it right there. Here is the gap. There is a little bit of a gap that we opened up with. We moved downwards. We filled in the gap. We basically entangled and tested, as you can see, the resistance on the upper side of things, of course. Tested median, and now we broke out of the bottom, and now we're basically testing the very same ranges. The question becomes whether we're going to break back in, or are we now breaking out of the channel and going lower. Right now, the momentum on the 1 minute is not all that indicative. Again, it's all kind of mixture of forces, both bullish and bearish. And so in other words, we're not going to get anything conclusive from the 1 minute. Plus, if we will get anything, it will probably last for about 10 to 20 minutes if we're really good at analyzing what we are, so what we're seeing. On the 5 minute front, we are a little bit more bearish, but that makes sense. We're kind of seeing what just played out right there in the last hour or so. And so if we're looking at the current price action, it actually is suspicious and may turn around and become more bullish, because we know the market moves basically up, down, kind of corrects on itself and has a negative action to whatever just was played out for the recent period. If we're looking at the 30 minutes, in fact, we're a little bit more bearish. Right now, some people would ask, Greg, but what about the gaps? And I've said before, gaps are not all that important. In fact, they are more of a byproduct of the cyclicality and the sort of regular ebb and flow of the price action. And by its nature, oftentimes, traders and various mechanisms recognize an opportunity, and by pushing or basically trading into that opportunity, they amplify the effect, thus making a self-fulfilling prophecy of sorts. But at various times, the market has its cyclicality, its broader momentum that needs to sort of play out. And in fact, the market can at times let gaps be for quite a long period. Normally, gaps on the gaps downwards do end up getting filled in when the market does correct on the way up eventually, which it does eventually. It's just that these things can take a lot longer than people expect, and so trading into gaps is a very risky endeavor. You really need to know what you're doing. More so, again, given the momentum right now, I would argue that we're probably going to see and test 7,646-ish by the end of the following 2 hours, give or take, given the structure that we're looking at and given how bearish we are still, with clear divergence downwards and with the D-dominance, basically bearish strength dominance, bearish momentum, bearish liquidity, more so selling than buying, in other words. Now, here is the really interesting part. The further out we get, the assumption of the periods grows as we progress. In other words, as we're now in 45 minutes chart, and we are seeing that momentum is significantly bearish with clear divergence. The bigger the divergence, the stronger the implication for the momentum behavior. In other words, we are seeing that the current session appears to become more and more bearish into the session. In fact, the following 45-minute candlesticks, given what we just saw on the 30 minutes, which is bearish on its own, 45 is bearish. And now when we're going to look at the hourly, we're going to realize it just has become significantly bearish likewise. In other words, we are expecting a significant movement downwards. In fact, what happened here, those who have been following my channel and are aware, I expected here a potential correction all the way to the top of the channel, right here basically. And if that would happen, it's not going to be also far-fetched and unimaginable to see the price action break out of this range. Normal sort of slippage-like behavior, sort of overplaying out the momentum, if you will, getting carried away, if you want to use layman's terms, and easily making it all the way to that level that we already tested multiple times, which of course was sort of identified via a gap in the previous sessions, right here around August 7th, kind of, as we can see, or August 7th, we can see August 5th. Basically, this level was already acknowledged and tested multiple times, so it's not going to be all that surprising if we're going to end up testing it one last time as we create this head and shoulders structure harmonic pattern. So around that 7,754.53, there was an assumption that may get tested. For example, this is literally what I posted to my members, not saying it will. I am saying it still can. That's literally what I meant by posting and sort of highlighting this V-like structure, inverted V. A, if you want to, okay? Arrow, whatever. But the point being is that we're seeing a lot more bearish momentum slipping into the system. Once you sort of zoom out a little bit, you're going to realize that definitely the trend that we're going in right now and have been moving in the past, I would arguably say, handful of weeks, which was more so sideways with an inkling of upwards. Right now, we're moving downwards within a very distinct, clear trend. which appears to be that we are basically at the roughly at the top end of it, at the top range, and we are probably going to slip down right now and test lower, which appears to be, of course, in agreement with the momentum, because we can't just be guessing. We're looking at what the momentum, meaning what the broader amount of people, broader amount of money, rather, to be more accurate, is doing actively. There is a caveat to this when we're getting to the 4 hours, which is closer to how our daily momentum looks like. We, in fact, are merely going through a corrective period. To sort of highlight this, if you're going to pay attention to the broader scheme of things, of course, we had a trend that was upwards right here on the left side of things. Then onwards, we had a downwards leaning, very significant, as you can see, so reaching lower trend. And now we're kind of moving sideways. We've been stuck within this pennant-like channel with a arguably bearish flag, although I would argue that the harmonic pattern of a flag does not necessarily determine the upwards directionality. It merely is a direct outcome of the harmonic patterns and how these things sort of structure themselves and play out. And so it appears to be a bearish flag. In reality, does that mean from here on out we should be bearish? Well, not necessarily. In reality, sometimes it does happen before a bullish trend, but right here we're not really looking at the bullish trend. We're looking basically at the corrective trend, which instead of actually being bullish and breaking out of through the 20 and 50 range like so, instead we ended up using up all the momentum. Basically, kind of all this momentum was spent. Instead of pushing higher, as I said we still may do, the momentum ended up being spent in a very inefficient manner to the bulls, basically, and more productive to the bears, as we are appearing to be moving in a downtrend right now. So instead of allowing them to have that correction, that relief rally, they didn't really allow them to have a relief rally. And so instead, for the bulls, this is going to feel like more of a prolonged singular downtrend, which we said just recently. I expect the price action to fill in that gap at around 7,630, 7,600, give or take. So basically, I expect the price action to play out in the following sessions, kind of into that area. So basically, kind of like so, at least testing that area within the framework of the current channel downwards that we're making our way within the framework of, and have been for some days now. And so it's not going to be all that surprising. After we fill in that gap, we're going to have a retest that will end up, or rather result in a retest upwards again within the framework of that very channel. To those who don't understand what I'm trying to say, I'm kind of trying to show this. I know there's a lot of trash on the screen. I'm going to try and remove as much of it as I can so you guys remain on point. Okay, hold on. I'm going to try and clean it up real quick. Hope everybody who's watching doing well. Talking about you, Casey. And the 1.5 other person. I gotta say, it is kind of phenomenal. And I know now there's a very low view count because people don't really want to hear the unpopular opinion or the thing that doesn't sort of play into their own biases, but it is what it is. I'm simply saying, or rather interpreting, conveying what the market is saying itself. I'm not biased in any direction. I'm actually just showing factual, numbers. So with all that being said, in the recent days, if we look at the sort of the behavior from a day standpoint, we've actually been riding a lower channel for the last handful of days, basically kind of this area instead of this area. So those of you who are more aware realize that basically those are the two halves of a just broader sideways channel, and so it's still going to be completely normal and expected to see the price action, if so, before we continue downwards, potentially. Now, again, just like I wrote here, not saying it will, I am saying it still can. Given this momentum that we are observing on the daily, which objectively right now is bearish dominant, okay, even if we zoom in super close, We are, first of all, bearish dominant, as you can see, 9.67 value versus 9.51. Basically, we are now having a lot more selling going on in the system, but as I'm saying it, you can see this fight happening. Basically, both forces are running to their lowest sort of momentum at the moment, lower liquidity on the broader scale of things, because again, being measured over the broader period, since we're looking at a daily measured through the daily lens, and also the daily lens, or the daily moving average, really rather, gives us a completely different channel. And so right now, objectively, we're just merely testing and revolving around, or rather just right below the median. And so actually that structure that I showed you earlier is not going to be completely unexpected still, even though we kind of passed through. So I'm kind of saying this still can happen. I'm not saying it will, but it still can. Why? Because if you look at the current structure, a move like so will result merely with a retest of the median of the channel we have on the daily scale, which again, all these channels are true. They're not true because the system guesses so. The price action itself structures its own channels via its behavior, via the data points that are extrapolated based on the behavior, based on the pivots around, again, certain highs and lows, thus creating a harmonic structure, as we call it, or a pattern of sorts. And so it's not going to be completely abnormal to see still the retest of that 7,777, basically. I would argue that that's kind of the closest range that may end up being retested at that range, simply because, as you can see, as we just said earlier, slippage is a real thing. And if we are testing median right up here at around 7,766, it's not completely all that far-fetched to see the market go all the way to 7,777, which in itself is a psychological level. Now, am I saying the market will necessarily do so? I am saying it still is capable of doing so, just like I said earlier, but I'm not saying it will. I'm saying it's capable, but does not mean it will, meaning the momentum, because it is still in a process of a shift, still has some residual leftover, little leftovers, if you will, of momentum, or in robotic buying, or institutional sort of trickery, let's call it like that. There's still an opportunity for that to play out. So I'm not going to completely say that's impossible. At the same time, I'm going to say that it's less likely. Why am I saying that? Here that we're looking at our weekly, which we just basically are running towards the end of the week. We are running towards the end of the month. Today's session arguably is almost chewed through. We now have left for the end of this week basically just tomorrow and Friday. Wink, wink, reminder to the community members. Friday we have our meeting with our member Rob. And I highly recommend everyone who was thinking to join. Now is a perfect time. You'll get to talk to Rob directly and ask him questions as we're doing the Q&A and all that beautiful stuff. And of course, we still have Monday of next month, so we can still, there is a little bit of price action to be had within that framework. We can still see a little bit of ebb and flow back and forth before we truly transition to more of this bearish momentum that we're seeing on the weekly, because the weekly is far more indicative that we're about to see this very bearish like price action in the following weeks. Why? Because we already crossed over. We've seen the confluence. We are objectively below the 50. And so we're now, directionality is pointing towards a lot more bearish momentum moving into the system, a lot more selling, a lot more profit taking. And that appears to be something that's happening on a broader scale of things. Since we're looking at the weekly, we are talking, if we're talking about a handful of weeks, if we're talking about a handful of candlesticks, we are talking about a handful of weeks in this instance, because every single candlestick here represents a week. If you have not caught up to this yet or don't know this yet, that's how it works. And so the monthly, by the way, has expanded. The gap, the margin between the two values has expanded. which is very indicative of a continuation downwards, kind of like so, wink wink. Basically something I was warning about, retaining the broader downwards trend on a broader scheme of things, which again, momentum wise, people, but Greg, we got a higher price point. Yes, when momentum fades away, this is why I've been warning and saying that momentum can start fading away in one or another direction, basically from one direction necessarily switching to the other. Very, very unfortunately, the broader the time frame, the slower the process. And if we're looking at cyclicality, we also understand that, again, if we're looking, for example, at such a circumstance of changing directionality, momentum, and broader structure on the monthly scale, and we're saying this is going to take a little while, or several candlesticks are several months. And unfortunately, we have been spending now 1, 2, 3, 4 months revolving around the very high range right here of the structure, the channel. Again, as we say, the same way that earlier it was generated via the data points. Itself, the price action itself generates its own moving average. It's just that in our case, we're using a more of a rigid-like structure, not these Bollinger Bands nonsense, because these just fluctuate up and down far too much, and just wrong, altogether wrong. The diagonal channels are far more accurate. Those who want to know and learn more, of course, join my one-on-one academy, where I teach and explain all of this in depth. Now, if we're looking at which now, I mean, it kind of becomes very evident that in the near future, we're still going to experience very bearish price action, irregardless of what we're seeing in the smaller time frame, because as you can imagine, we can have a certain type of behavior far longer, many more times back and forth within the framework of a month time rather than something a lot shorter. And so basically what we saw in the smaller time frames is just indicative of the near-term price action, and what we're seeing on the broader time frames such as the monthly, weekly, and so on, we're looking at something that's going to play out within the following months, in fact. So basically kind of here I'm already saying and giving you the heads up of what the price action is about to be doing in the following weeks and months. And in fact, our near destination major support level, first of all, of course, would be 7,000, as you can see right here on the way down. In fact, kind of highlighting that area, that pit stop. Again, none of these areas will necessarily be something that we'll be testing for a long time, because we're building out this harmonic pattern of a head and shoulders, and normally that head-like structure is very rapid in both directions, normally, not always, but normally. And given the structure of momentum that we're building up, basically we're now almost charging up our downwards price actions like an arrow, that the longer it's getting charged, the stronger it's going to fly and further out in the direction it's pointing, which in our case is downwards, as you can tell, or changing into that downwards directionality. And so even if we're not going to necessarily get stuck for a long period on it, but still 7,384.45 is a very important price point that will be retested on the way down, potentially on the shorter time frame, not on the broader scheme of things. As you can see, it's a major price point that got retested multiple times. In fact, throughout 1, 2, 3 months, many times over. That's just because you are not seeing the granularity, the internals, the inner workings of these candlesticks right now, because we're in a larger time frame. It's engulfing, it combines all that price action into a single candlestick. You cannot see, but in reality, the price action probably tested it multiple times, and so it's not going to be all that far-fetched if we do so on the way down. But the broader movement that we are expecting to see here, kind of pointing towards, of course, again, a retest of the median, which now has perfect confluence with our 6,813 level that was established multiple times right here on the left side, on the left shoulder, basically. And so right here on the right neckline, of course, this is the neckline, this is the shoulder. It's not going to be all that far-fetched if on the right side right here, we're going to end up testing it right here in that vicinity before we continue on downwards, which will bring us eventually towards, as you can tell, 6,000, 5,900-ish, upper band area, handle 6,100, and potentially, given the necessary structure of the head and shoulders, we are anticipating a full-on correction all the way to 6,666 potentially. Again, that number plays a role, that 6,813, or maybe even where the channel will be residing at that future, which is closer to 6,938, which is going to be very misleading. A lot of people will think, oh, that's it, the correction is over, now we're in a rally from here on out to the moon kind of thing. Basically, they will think that this green arrow, kind of in their imagination, the market is about to do this, which is very wrong and very misleading, because the harmonic structure is not saying so at the moment. And again, those who know I'm merely an interpreter for what the market is actively saying, not what I have any biases or feelings for. In fact, I don't do that. We don't have feelings for any particular thing. We simply act based upon what the technical structure is telling us, which is a mathematically derived structure with mathematically derived directionality and forces. And the more you understand that, the better you can understand why and how these things are playing out. I'm sorry I'm falling out of frame all the time, because I tend to not look at the camera and not think about it. I'm more so in the charts, if you will. It's a lot more interesting in my humble opinion. And quarterly, I mean, I don't have anything else new to say about it. I already spoke about, if you really want to see what the quarterly right now, the real quarterly circumstance right now is, you're going to realize that in reality, your quarterly is a lot more bearish, as you can tell. That is us looking at our NASDAQ, basically is a lot more bearish and have been so for quite some time. Especially if we switch to our monthly, we're going to realize that our downwards trend is a lot more aggressive and a lot more indicative of that major correction that we are building up towards for some time now. It's just that people are blind to it, because they think that if they will not look at it or ignore it or not know it, it's not going to happen. In reality, they simply are not going to be prepared for it. That's all. So that's kind of it. I think we've gone over all the time frames. The only thing maybe I want to mention by passing is Tesla, because as I said earlier, if the market will be permissive, we will see that movement to the upside. Let me zoom out, so instead of it looking like a bunch of junk, you can understand what I was trying to say here. I was trying to indicate that basically here within the framework of these channels, we potentially can see a retest of a 420 again. Pardon me. Okay, that should be fine. A retest of 420 again, which basically is not that abnormal, kind of staying within the framework of the channel as is. Basically, just let me give you a better, clear indication for what I was saying that I think will happen. My thought was that this will play out like so, because this process can result in price action that is very close to that 420 psychological major level. It's not going to be all that far-fetched. As I just said literally 4 seconds ago, we're going to have a little bit of slippage, and so the price action will play out yay far and retest 420 again. This is basically only if the market will be permissive enough, if the market will allow or not. In other words, permissive, if the market will not start breaking downwards very heavily within the following week, 2, 3, 4, this potentially can play out. In fact, I would argue if the market will start dropping, but likely not too aggressively, this can still play out, maybe faster, just to kind of get rid of the position. Of course, this is done by various people, institutions, forces in the market. So, but still, all of this will result in a significant downtrend. Now, why do we think so? Because just like all other assets that are risk on right now, tech revolving and just in the entire sector appears to be having a very significant bearish structure that is in progress and have been building up. Even on the weekly right here, we basically, once this week sums up, we can see it's going to flip over and become more aggressively bearish. So in other words, it's kind of like a ching moment in the casino. You can see our daily is already becoming more aggressively bearish, retaining and building out a downwards trend. And so basically what I'm saying is not something that the market cannot do. It's merely its current directionality, the current trajectory, with the current force that it has. It still may happen. But just like I said earlier, I'm saying this can play out. I'm not saying it will. And so the market can end up collapsing a lot faster, kind of depending on how quickly the market will break. Right now, objectively, if we look at the 4 hours, we still may have a bit of a corrective motion right here, which will be that movement upwards, at least in the direction upside, as I was thinking. But it has to be very aggressive, very strong, but it probably has to be a move like this to become rapid. It has to be news based or some, some noise based, basically. Right now, all we are seeing that the price action is just merely filling in the gap that was generated right here. And so right now, the current destination for a Tesla would be roughly around 370-ish area, just to fill in the gap. No, just to be more clear, it's more so right here, which is 374. Yeah, sorry, more like this. That's it, ladies and gents. You all know what to do. Don't forget to like, subscribe, and all that great stuff. Wow, Dine, good to see you. I was trying to reach out to you so many times via Discord, via Patreon. My pleasure, dear. Why are you missing our technical analysis sessions? You're missing out on so much great material. You're missing out on separate trades we're talking about, or things we can do in the time being while preparing for the market drop. You missed out on a lot of material and really valuable meetings. And I do think you can contribute a lot to the meeting we're going to have this Friday, which we're going to have with one of our members, Rob, as I mentioned, that Rob will be telling and sharing his own story in the investment world, in the trading world. You moved. Wow, that probably was one hell of a project. Okay, that definitely explains it. That definitely explains it. A lot of our members right now are in big projects in their lives. Unfortunately, I know some of them are more positive, some of them are more negative right now, so a lot of members are busy, but I'm glad to see you. I'm glad to see you jumped on the live. Do try to join us as much as you can, because there is a lot of material. I mean, the viewers probably will not know, but I know you're a graduate of the academy, and since you actually are able to understand the language and what it is that we're showing and explaining here, we've been talking about a lot of really important stuff that I think you missed out on, in the sense that it was more of the advanced like material that has to be based on the more basic material that I taught you in the academy. And so you really missed out on a lot of great stuff recently, but I would love it if you would start joining us as well. I'm also moving soon. Oh my God, like everybody's moving. Oh my God, that's just insane. No, I'm sorry for doxing. I'm not gonna say where, but one of my beloved members, Noi, just moved. Don't move, camera, stop moving. Okay. Noi just moved. I know, now I know that Tan has moved. I know another member of ours moved. So, Alex, of course, is always on the go. I wonder where he is right now. It's crazy. Everybody's moving. I wonder what's going on. I wonder if this is an ominous sign we should be paying attention to as well, as everybody's moving. But yeah, so kind of back to our horses. Let's look at the 30 minutes and the time being, I guess, since this is the most interesting thing we can do for the time being. 30 minutes, 45 minutes, that would be us looking into the following hour, 2, 3, 4 or so, towards the end of the session, basically. So what I'm thinking, not 4, no, more like 3. But what I'm thinking here is that since we are still at convergence and entanglement on the hourly right here, and it appears to be that we're kind of having a bullish-like situation, mixture of bullish and bearish. That was a good one. A bullish and bearish mixture of, and so right now it appears that we're moving more so sideways than anything else. We're basically testing median of the current moving average, kind of this lane right here. Can we break through it? Of course we can. Just like I said earlier, there is still residual momentum to be played out. Can it still play out today? I would argue that doesn't seem so. I mean, the market appearing to be a lot more bearish, and I would not be surprised to see if the price action will try to settle at around 7,650-ish, closer to that range, 47, as you can see on the screen. Basically about 30 points lower than where we are right now. Hourly is still bearish. Now, the reason I'm saying this still can play out, there is some indications of confluence of the forces right here within the following, I would say, tomorrow. I mean, maybe overnight we're gonna have some behavior that's gonna end up with us gapping upwards and starting the price action from this area. Of course, the bulls thinking to the moon. We know that the reality is a little bit different right now. We're more so in a buildup of a downwards trend back to the sideways structure we've been going within the framework of for the past several months. And from there on out, we're just simply going to break, as I said. Right now, we're in the process of going back to 7,384.45, which those who know, this is a technically derived level, and that's why it's also strong. And the deeper you're going to go here, you're going to realize how strong it was and how many times it has been retested and solidified by doing so. It's not just something that we don't guess these levels. These levels are actually forces that are highly accurate and mathematical and have nothing to do with any biases. And so it's not going to be all that far-fetched if on the way down, in fact, more likely than not, to have the build of this very structure, as we said, retest this level on the way down, although we know we're building up towards a far more aggressive movement downwards, which you can see right here. Basically, this is the zoom out picture. We're building up towards having a broader harmonic pattern here that I just highlighted, the shoulder, like so. Well, not wrong tool, just to be more like behavior like so in the broader scheme of things, then with correction, as we said, and still yet a continuation downwards. Why? Because we're now seeing actively the larger cycle playing out, something that was in the works for the last 30 years and arguably so even 100 years. Don't forget, last biggest economic problematic period, inflationary, recessionary, you call it whatever, it was all of the above, 1930s, and we're right now in 2026. And those who know, the 100-year cycle does not have to be precisely 100 years. Greg, we're not in the 30s yet. That's not how it works. It is more of a, it's, Tan, people tend to over dramatize these things. I wouldn't call it a reset. I think it is merely a natural process of the market keeping balance on the broader scheme. I don't think so. I know so. In fact, there's the broader cycle that's playing out. There's the 10th year cycle, which everybody gets to participate in a whole bunch of these back and forth. These tend to have very minor corrections. As we know, there's the 30-year cycle, which has naturally larger corrections. And the 100-year cycle naturally, of course, drags out a little longer because it's the culmination of a 10-year cycle at the same time. Naturally, if you break down a 100-year cycle, it would be, 10, arguably 10-year cycles. 30-year cycles, but Greg, 30-year cycles do not make 100 years. That's not how it works. It's an average, and that's why one cycle can end up being 40 years, another one 35. Put together, roughly, they revolve around that 100-year mark, which we're really, really close to, which is very ominous. And since we're seeing this build up for a very long time, and yes, it's been dragging out what feels like forever, yet it doesn't change the broader outcome. Those who are prepared, will know what's happening and how it will play out. Those who don't know will be caught off guard with their pants down when a tide comes in. People who are not aware of these sort of things, unsurprisingly so. And in fact, this is part of the meeting we're going to have this Friday with our member Rob, talking about these very outcomes of how is it that if we have such a solidified strong infrastructure for retirement, how is it that the majority of people end up not retiring successfully and being stuck then in the workforce all the way until they pass away, unfortunately? And that is because unfortunately, the retirement funds are oftentimes correlated to the stock market and the broader economy. And if the broader economy and the stock market crash together, which normally they do, unsurprisingly so, these 401ks, these retirement funds go to shit. and you have to be prepared for such situations. And in fact, that's the whole point of talking with our members, so everybody will be able to see that unfortunately, as it appears, the system is very bad because most cycles, most generations are not successful at retiring, and we appear to be closing in on one of those end cycles. So yeah, it's not a reset, it's just balance. It's just, and again, I mean, to each their own, of course. You can call it a reset. It's completely okay. It's just that I would not call it a reset because if you look back, for example, if you look in the 1930s, we experienced an 86% correction on the market. So experiencing a 50% correction is not as much of a reset as much as just kind of we went significantly overboard. Now we're bringing it back down to earth, so we can now have room to bring it back to the sky, so to speak. Simply because of, we can't go into the stratosphere with this plane, so to speak. And it is just retaining balance. The market loves balance. In fact, the institutions love balance. It allows them to ride back and forth and replay more money, more higher share count on the same prices and through the same coordinates. Through doing so, generating more income with less difficulty or less liquidity necessary for it. Again, I appreciate you saying so. It's just that, again, if you, I really do think that a 50% correct, you know, basically, I'm going to call it what it is. It's just a healthy, if you have this holiday, for example, Thanksgiving, where when people tend to eat a lot and then complain about the weight and all that, it's not allowed. It's okay to eat a lot on Thanksgiving, and you just need to balance it out by having a little bit more of a workout afterwards. And the market, just like any mechanism, it seems, in life, likes balance. And so eventually, when it overdoes something, it also overdoes in the other direction, kinda, relatively speaking, of course, in relative terms, just to retain that balance. And this is a phenomena that, if you look into the market since the modern market, since we know it since the 1800s, it has been doing so since then. And arguably, those who know history can look into it and realize it has been doing so since forever, since ancient times, in fact. The market tends to over exaggerate, over push a product, get overexcited, and eventually correct back to what is true value, what is fair value, in fact. And so that's it. That's kind of just that's why that's why I keep on insisting to and calling it a rebalancing rather than a reset. Because a reset in my mind would be something more aggressive, something akin to an 80% correction, which Michael Burry is thinking. And you know what? I still think, just to argue this and drive this point home, because I really do hear people make fun of Michael Burry all the time, which drives me insane. It's like Michael Burry has the resume and the money to prove that at the end of the day, it's almost like saying that, look, in the process of the race, I was ahead of you for a couple of seconds there, which in market relative terms, literally, even if you're ahead of somebody's portfolio for a year or two, you are literally just, in relative terms, just a second or two in relative time. And Michael Burry, at the end of the thing, when standing there on the podium with his first place medal or second place medal, whatever you want to call it, can still argue that at the end of the day he was right, even though it took a little while. And unfortunately, these processes, this is why even we, the technical specialists, do not say, we never condone, we do not advocate for timing the market. Timing the market is one of the worst diseases that people have and think they can figure out, and don't realize that their account manager or account managers in general broadly identify ranges within that framework that is being generated by the price action itself, and where relative highs and relative lows are located, and DCA through them and ride them out. And so this is not something abnormal. In fact, that just this balancing act. If you think about it, this is sort of a normal behavior, and people like Michael Burry understand it. Michael Burry may be wrong on the timing, may be wrong a little bit on his assumption of it being more aggressive than it is. By the way, it's too premature to say. Maybe I'm going to be wrong and it's going to be a lot more aggressive. It's going to be more than that 50-60% that I'm saying. It's going to be closer to that 80%, in which case Michael will be closer to the correct answer. Which I don't think so. Again, we're not at that place in the cycle. Those who know. But irregardless, even if we're going to, as we all agree, we're going to experience this major correction as it appears on the technical side of things, it doesn't matter, even if he's wrong on assessing 80%, it resulting with 50% correction still is more than good enough. Still more than makes him far, in my book, I would call him far more correct than wrong. That's what I would say, because the end result will be is him growing his portfolio while everybody else's shrinks and even becomes a loss, an active loss. So yeah, that's kind of what I am thinking, given the structure. And I think, in my humble opinion, I have a lot more respect to Michael Burry, rather people like Tom Lee, that is now slowly starting to admit. I actually wanted to make a video about it, but as you guys know, I'm not that sort of a YouTuber, if you want to call me that. I don't chase views as much. I am there to give you, objective opinions and information. Even Tom Lee recently started talking about how he basically started seeing correction, even though, of course, with his, conveniently placed excuses of we still may end up testing 8,000. And yes, I agree with that. We still may end up testing 8,000. Unfortunately, the lows that we spoke about do not change because they were already set in stone, if you will, almost set in stone, and arguably probably will not change, can fluctuate a little bit. On the grand scheme of things, basically, if I'm saying we're going to end up testing 3,300, I'm also saying we're going to potentially test 3,200, 3,400, 3,500. Any of these areas may end up being our low points, although there is a technical structure that does imply that it's far more likely than not our final point in this bearish portion of the cycle will be at around 3,300 all the way to 31-ish. Again, that is a range. As you see, even in this scenario, I'm not saying a precise level, but rather a range. That's because that's how the market works. And so in this instance, I think people like myself and Michael Burry are able to identify things that are happening on a broader scale of things, which most people are, first of all, are not tooled for. They don't have the necessary skill set, nor the knowledge, the know-how, and let alone sort of, if you don't know this, if you don't know what you're looking for, you're definitely not going to be able to find it. And since you're not using the right views, the right time frames, you're basically oblivious to this. And unfortunately, that's why cyclically, that's the same sort of outcome. Most people get pushed out of the market with major losses instead of profits. This is not an abnormality, quite a normal behavior, quite a normal thing that we see cycle over cycle over cycle. And so that's it, ladies and gents. That is it for today. I promise that's the final time I'm saying goodbye. Promise, promise, promise. Those of you, of course, who are not here and want to watch this can watch this. Do not forget to join my Patreon. This way you can join our lovely community, the Technical Analysis University, where I even teach one-on-one members who want to sign up for it and become serious about their own independence in the stock market. Right now, that tier is, and like all the other tiers, are significantly discounted. As you can see, basically instead of 5,000, you get here a 20% discount. And again, this is because this is a one-time payment, because this is monthly over a year period. So as you can see, this is, instead of being $90, then becomes $72, and then being chopped in half, $36 for full access to the Discord. The Academy members now have to be members on this tier. This is a very sort of convenience and a necessity thing that came about for quite a long time. If you don't know, feel free to DM me and ask about it. And of course, if you just want to get to know and introduce to the community, we have this basic tier that right now is merely $4 a month. Absolutely the cheapest way to get introduced to the technical analysis world. And instead of $10 a month for the first year, it's going to be only $4. Definitely jump on the opportunity before it expires on the 1st of September, which is literally, as we said, about a week away from now. Love you all, and I'll see you on the next one. See you in the community, and see you in the meetings. So see you in the next one, and don't forget to ring the notification bell. Otherwise, YouTube will not inform you, and you'll stay behind. Love you all. See you.